Hey, it's Tyrone Jackson, the Wealthy Investor, coming at you with another hot educational video about the stock market. In this video, I'm going to cover trading stocks versus investing stocks. Now, if you really like all of these videos that I'm posting here on YouTube, make sure you click that subscribe button right now. So every time I post a brand new video on a hot topic that's running through the market right now, you are the first to know. All right, so let's dive right into it. I want to talk about something that is not enough of a distinction on CNBC, which, as you know, is the dominant stock market news channel for traders and investors. And I'm also going to say at the same time, even in many of my talk show appearances, I fail to make the distinction for audiences between trading and investing. And that's why I want to post this video right here now to help so many of you decide in your stock market choices what it is that you would like to do and how you'd like to make money in the stock market. So we're going to start with one of my favorite stocks, members of the S&P 500. It is Starbucks. Starbucks ticker symbol, as you know, is SBUX, and it's trading around $53.50. Fabulous earnings last quarter. And let's take a look at now something called the 5-year trend. Now, you know, in the Wealthy Investor Program, I'm always encouraging you to pay attention to trends. So we're noticing, had you purchased the stock, we'll even say around here, 5 years ago at $30.83, that the stock has a tendency to rise over the long term. Why? Well, Starbucks is really good at generating top line revenue, which I'm always talking to you about, as well as quarterly revenue, and the stock does in fact pay a dividend. You'll notice over the past 5 years, although its trend is upward, starting to trend down, that's going to be temporary here because of things that are going on in the market, that Starbucks overall, from its low point to its high point, is trending upward. Now, I want to point out these little peaks and valleys here, and this is really what volatility looks like. Okay, what volatility looks like. And the reason that we have these peaks and valleys combined with this long-term trend is because the big institutions that trade Starbucks stock are jumping in and out of it with 2 million, 3 million, 5 million shares. While on Wall Street, there are other institutions that are buying shares and holding. Now, how do we know that they're buying and holding? If they weren't buying and holding, the trend wouldn't be upward, right? So you've got institutions and insurance companies and college endowments that are trading these shares, right? Every time they move up a dollar or so. And there are other institutions that are saying, no, 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 no. What we do here is we hold the shares, we buy them and we hold them, because remember, investing is all about what you think the future price of a stock is going to be. That causes volatility. So let me explain this to you, because it's really not you or I as retail investors that really run the market, because we simply can't buy enough shares. It's really the institutions that are buying 5 million shares at a pop, 2 million shares at a pop, 11 million shares at a pop. They're the ones who are moving the stock, and you and I can ride along if we please. So here's something I want you to remember, because this is really important. Stock trades produce income. Investments for the long term create wealth. Let me say that again. Stock trades produce income, like money you can actually put in your pocket when you buy the stock and sell it. Investments produce wealth. Now, what kind of trades are there in the Wealthy Investor Program that we follow? You know by now it's covered calls, because we sell covered calls to other people, or it's volatility trading. So let's go back to Starbucks here. What would be a volatility trade? Well, we would know that institutions are volatility trading because we get these peaks and valleys very quickly. See here, then the stock sells off. When it's selling off, the traders are taking profits. When it's moving forward, the traders are coming in and buying more shares. They take profits. Then there are times when there are huge buys, and then there are sell-offs. So this is what volatility really looks like. And if you're unfamiliar with volatility, get to know the term. Well, if the stock is trading at $53.53, if I were to buy, let's say, for example, 50 shares, 100 shares, 200 or 300 shares at 53.54, you know, in the Wealthy Investor Program, I am famous for using automated trades where you don't sit there and watch a computer all day. Use the software inside your account, TD Ameritrade, Scottrade, Fidelity, wherever it is, and you let the software sell the stock for you. If you like to trade for income, that is really easy because you're buying the stock, you're letting the software inside your account sell it. I like to use the GTC, of course, right? 90-day GTC if I'm trading. And I let the software sell it, and then I get an email when the stock is sold. That's kind of basic fundamental trading, and anyone can do it. If you're watching this video and you have a trading account, you can use GTCs and automated orders inside your account if you want to volatility trade just like the institutions. The only difference is you're not manually executing a volatility trade, you're letting the software actually do it for you. So remember, trades give you income, cash you can actually spend from buying a stock and letting the software sell it for you. Covered call is a little bit different than volatility trading because you make your guaranteed money from selling rights to the stock, and that is my preferred trade because it doesn't matter where the market goes, you can make money whether stocks go up, go down, or stay the same. Now, we can take our trading profits and we can invest them in other companies that have a tendency to rise, let's say faster than Starbucks in this example, and that's where we're going to get our wealth from for the long term. So, if I had been taking my trading profits and buying more Panera bread, right? PNRA is the ticker symbol here. Notice the stock's at $194. If I had been taking my trading profits from Starbucks and investing in Panera Bread, and I started that 5 years ago, right? So let's look at see the 5-year chart here. I started that 5 years ago. I could have gotten the stock even if I got in at 162. This has a fair amount of volatility, right? And if I held it, I could have held it up to $200 a share, but I would have been using my trading profits to what we call build a position in the stock. The same thing is true for Costco. Now, Costco has a little less volatility than Panera Bread, but 5 years ago, if I were using my what? Trading income, I'd use the profit from a trade, and every time I make a trade, I would go and buy more shares of Costco's. Look how well I've done, because I would have been in the shares at around $80, right? The market is taking the stock higher. Remember, there's still institutions that are trading it, but look at what we're seeing right now in this pattern. There are more buyers than traders. Traders take profit, then the stock rushes up here, and then it pulls back, and it rushes up again. It's in a slight pullback because you know what's going on in the market right now, and it'll probably rush forward. By the way, this pullback is always followed by something called retracement, and that's what we have there, right? So, if I am a trader, can I be a trader and an investor at the same time? Can I trade stocks for income and then take the profit and invest them for the long term? Yes. I could have done that with Panera. Even though it has all this volatility, I could sit there, ride the volatility, and let the shares run up. I could have done it also with Costco at around $80 and rode the shares all the way up to where they're trading now, about 149. I could have also done the same thing with Tesla. Right? Now, this is a remarkable investing story. Why? Because if you've gotten your shares around $31 a share, look at what happened to Wall Street. The investors ran the stock up even higher to its highest point here, which is about $280, and now you know that it's trading around $199. So what you're going to have to decide when you are in a stock in your account, are you in that stock for trading to produce that income? Or are you in that stock for long-term wealth, meaning you're going to hold the stock? Now, only you can decide what stocks you like to trade and what stocks you like to invest in. But you must know the difference between both, because when you understand what stocks you're trading versus what stocks you're investing in, that's what's going to make the difference. And notice this here, that we're only looking at 5-year trends. So if I'm investing in stocks, guess what? In a 5-year period, as long as I have an approach that works, I can do very, very, very well. Okay? So, I just want to give you that as a really important tip, because sometimes people think they're just buying stocks and they don't know why they're buying stocks. And if you ever want to see my trades or follow my trades, all you have to do is go to witradeschool.com, become a member. And I want to point out that WI Trade School is 80% video. Right? There's some blogs and stuff like that. But if you want to know my major strategies like understanding corporate earnings, Apple stocks, high risk stocks, but the video I really want you to watch when you become a trade school member is hot stocks under $100, because those stocks are about to go from stocks that you would trade into stocks that you would invest. And if you don't want to do research on your own, perhaps Trade School is the place for you. Hey, this video is really important because if you can make the distinction in your trading account, no matter what the size is, what stocks you're trading and what stocks you're investing, you have conquered at least half of the discipline of being successful uh, in your trading account and for the long term. We must understand our goals, okay? Really important. Thank you for joining me with this video. If you got some value out of it, make sure you click that subscribe button because every time something great happens in the stock market, there's something I think that you should know in easy to understand language. I will always explain it to you. And if you're ready to follow my trades, become a member at WI Trade School, where I answer your trading questions every week. That's it for me, Tyrone Jackson, the Wealthy Investor, wishing you lots of trading and investing success.